Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Monday, July 23rd, 2012. We're going to take a look at the U.S. markets and the European markets a little bit today. The main thing I want to point out here, looking at the Dow Jones Industrial Average, if you follow us on our free website at PerfectStockAlert.com, you know these charts are all kept on our website, and we update them every single day, advancing stop loss limits and so forth and so on. If you followed us there, you know that if you watched the video, you know that we were recommending going long at this point here. We traded up on this one and continued to advance to stop. We were eventually stopped out on Friday. We were stopped out of both the Dow Jones Industrial Average, the NASDAQ, the S&P 500, as well as the Russell. So we were out of everything as of Friday, which I liked because I didn't really want to hold that position going into the weekend. So in any event, we were just sitting in cash, and now we continue to remain in cash. But here's the thing that I want to point out to you. You'll notice on this particular chart, you'll see it on several charts. You've got what looks like a little hammer candlestick formation right here. I'll show it to you again in a moment on some other charts. I wouldn't be a buyer of this situation. I know a lot of people are going to look at that and say, hey, that's where he likes to buy so we can get back in. I wouldn't. The main thing, of course, for just this particular chart, look where your ultimate oscillator is at. It's at 60. That's not what I want to see. I want to see a nice pullback and then a hammer candlestick formation. We don't have that. We just have a couple of days to downside a little hammer candlestick formation, and I don't like it. The main reason being, for me, not just the signals there being a little bit weak, but the fact that what's drawing us down here. When we started this move here, we started moving lower here. We talked about this, made a lot of sense to me. Fundamentally made sense. Your economic situation made sense. Then we started to reverse the situation here, and I said, okay, you can trade this at this point, but I don't like it. I'm not a fan. I don't believe it's really strong, so I would expect it to get stopped out eventually, sooner rather than later, and that's exactly what happened. Now I'm not in a hurry to jump back in. The main thing being that just because you're seeing hammer candlestick formations in the U.S., you need to ask yourself, are we seeing that same thing in Europe? And the answer to that question is no. They are falling off of a cliff, basically, and we saw news out today, basically, that we're seeing short selling banned in Spain as well as in Italy. When we saw that in the U.S., that wasn't the end of the sell-off. That was the beginning of the sell-off when we started to see that short selling ban. So, again, I would not be out there buying this market at this point in time. I'd be looking for an opportunity to get short, which means I want to see a jump to the upside a day, 2 days, something like that, and a nice signal, nice shooting star signal. We don't really have it here. I could call it one here being this day, and if we just simply blended them together, you'd basically get a shooting star signal, but it's not really as clear I like to see. So anyway, I'm just watching these markets, keeping a really cash position, and I wouldn't take a long position unless everything told me to do it. If I had 3 or 4 signals, it's not enough. I want everything out there to tell me to be a buyer, or I'm just not going to do it. And here's one of the big reasons why. What we're doing here is this previous high way up here, marked our big peak there. We sold off, and we've bounced around up here. And this chart is not as clear as the one I'm about to show you, but you basically have tested it and you're falling away from it, meaning this guy right here is not just a temporary peak. It may be a massive peak that's going to be there for a long time, especially being the fact that nobody's predicting any positive news or any positive earnings results at the second half of the year as opposed to the first half. So you have no real catalyst to take you higher than this point to begin with. So nothing I see out there, fundamental, technical, tells me to be a buyer. Everything tells me to be very cautious here. Let's take a quick look here to look at the French markets. I'm not going to look at all of them today. I just want to kind of draw this out to you, make sure that you understand that I'm not just looking at one single chart. I'm looking at every chart telling you the same thing. Here's your previous high point, nice sell-off, attempted reversal, tested a previous high here, fail at it, sell off, attempt again, fail again, and sell even lower. So again, back here we told you had a major gap from this close here up to this point, and we would not be a buyer of this situation here because they never filled this gap. So we told you that was a no-no. You don't want to be in that situation because this rally would be fake and you'd end up falling down and fill it anyway. So this is what basically happened. However, the main story here, the main thing that should be catching your attention is that this high point here was not reversed. You did not get a, okay, we broke out. You didn't get it. You tested it, failed at it, tested again, failed again. There's major resistance here. I don't want to be buying here. I want to be looking for opportunities to sell. One last item I want to point out on the French CAC 40 index here, and this won't be seen on every market, but there are several of them already out there that have developed, and you can see that as a precursor to the others developing it in the same way. The main thing I want to show you is the short-term trend. You've got this high point here, and then you've got this low point here. Lower high here, lower low here. This is now doing this like that. So you're now not trending up like you were here. Now you're trending back down. So I believe you've just shifted the actual overall trend. Has gone from what was an uptrend back. Let me clean that up. What was an uptrend back here, then broke down. We started moving lower, and then we started to reverse it. Well, this is a temporary situation. That's why you can be bullish and bearish at the same time, because you can trade the move to the upside that we did on some of the charts in the U.S., but where our overall view is still this major bearish condition that we're seeing. A quick look here at the Hong Kong Hang Seng Index. You get this high point here, a low point here, a lower high here, a lower low today. So we're now seeing, again, under one of these particular charts, they're giving a confirmation. Actually, I should draw it this way. This guy is actually that. But anyway, they're we're starting to see a turn here, a rollover of the share prices, and unless that is curbed, we're going to see more and more charts continue to break down and move lower. So keep an eye on what's going on in the markets out there, especially Europe. That's the #1 catalyst. Yes, we'll have earnings data that come out here and there and give good news in the market, maybe an update there, an update there. But the main thing that I want to talk about is Europe. That's what's really the major issue. And once this earnings data is out, we have nothing else to look at except for lower expectations for the rest of the year and what goes on in Europe. One last indication of a reversal in the actual uptrend back to the current downtrend, the previous downtrend in the U.S. markets here and globally would be the VIX. The VIX runs the inverse of the S&P 500. So when you're looking at this market and you start to see a shift here, you should start to expect to see the same thing signaled in the S&P 500. We talked about that a little while back. We were starting to see this selling situation here. We told you this was an overselling. Basically, you had a bullish divergence forming. The low close was here. Then you got lower. We kept going lower. Yet the corresponding time period in the ultimate oscillator here and here was higher, telling you this was overselling. You were going to shoot back in the other direction. Well, when you did, what you did today, you'll notice that you actually broke out higher than the previous high. That's signaling a potential reversal in trend again. We were having a situation where we had high point, lower high, lower low, lower high, lower low, lower high, lower low. Now you've got a higher high. So the trend is beginning to shift again. So this next little pullback here, we'll be looking to see if do I get a series of higher lows. If I do, you buy that situation, expecting this to move higher. However, you have to also remember that is the inverse of the S&P 500. So you'd be looking for this to be a buy situation in the VIX, and you'd be looking, of course, for a sell situation in the S&P 500. So all the charts basically tell us the same thing. Don't be a buyer right now unless you're looking at the VIX, which is actually a trade on betting bearishly on the U.S. markets. If you've not been to our free website at perfectstockalert.com, it's right there. It's 100% free. All we ask in return, please refer a friend. All these charts are kept and updated every single day on our free website there, as well as several videos discussing different trading strategies, as well as like 100 different videos teaching different technical analysis tricks and tips that you can use, that we use all the time to actually analyze charts effectively. God bless, take care, enjoy your day, and as soon as I see a nice sell signal I can take advantage of, I will let you guys know. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.